On the back of the empty economic calendar for the eurozone, market participants are alerted to news from the United States. Investors are anticipating the keynote speech by Fed Reserve Chairman at an annual symposium in Jackson Hole. The speech is slated for Friday. Investors will be looking for clues as to the size of the first rate cut in September in Powell's comments. The highlight of the day is the payrolls benchmark by the U.S. Labor Department. The report might increase the bets on a recession in the U.S. economy and also push the U.S. dollar down. The markets will get to know the revised data on the U.S. new jobs for the year ending in March. The updated figures may show that U.S. labor market growth was actually even weaker than initially reported in the NONFARM payrolls per month. According to the Bureau of Labor Statistics, a total of 2.9 million jobs were added during this period. This is an average of 242,000 per month. At the same time, economists admit that the number of added jobs may be revised downward by about 50,000 per month. And these revisions are so important that they could influence the Fed Reserve's decision on interest rates. Moreover, Jerome Powell might adjust his keynote speech in Jackson Hole to the new information. After all, a strong decline in the initial data will prove that the U.S. Central Bank underestimated the economic downturn in the country. Ahead of the presidential election, this will be very bad news for both the Fed Reserve and the image of the ruling Democratic Party. This is extremely bearish news for the US dollar, which yesterday plummeted to a new bottom and an 8-month low of 101.31. On early Wednesday, its index recovered a bit and consolidated in the range of 103.10 to 103.30. Recently, a lot of currency pairs with the US dollar have been trading in the same way. The greenback cannot find support for growth in any of them being in a free fall. Wall Street benchmark stock index, the S&P 500, is universally correlated with the dollar exchange rate. That's the S&P 500 grows when the US currency weakens and vice versa. Oddly enough, the S&P 500 also ended its 8-day winning streak yesterday. In the first half of the Wednesday, it traded in the red within an intraday corridor of 5,585 to 5,620 points. Most likely, Wall Street also prefers to wait for more specifics from financial policymakers. The euro-dollar pair, which commonly directly correlates with the US stock market, has also maintained this trend today. Earlier, the euro rallied considerably and reached an 8-month high, around 1.1130. You certainly remember that the European Central Bank began cutting its refinancing rate in early June. That's the euro has already worked out this dovish decision. Now the euro is back in the game and ready to win, because it's the dollar's turn to weaken on the Fed's agenda for a rate cut. Moreover, the U.S. Central Bank did not clearly outline the trajectory of further rate cuts and made it independent on the incoming years. So, traders cut on a part of long positions in the euro-dollar pair. At the same time, the market ignores all technical signs that the euro is overbought. They could lead to a pullback, but current bullish momentum supports a further uptrend. If the price settles above 1.1150, the instrument may continue its movement to the high of July 2023. In a case of instability above this level, the euro-dollar pair may temporarily pull back to the support of 1.1050. According to our analysts, it means the regrouping of trading forces. The oil market traded lower on early Wednesday. The price of the benchmark Brent grade has been falling for 3 sessions in a row. In the first half of Wednesday, Brent crude was trading at about $77 per barrel. A pullback was driven by an unexpected rise in US oil inventories. The US Energy Department reported oil inventories rose by 0.35 million last week, instead of following forecast by 2.8 million barrels. In addition, technical indicators show the possibility of a further downtrend to the lowest levels of the month. However, taking into account the growing oversold conditions, our analysts predict the scenario of a pullback, which could correct the current trend. Speaking about the dollar-ruble pair, our expectations of the concentration of a trading forces 90 have already come true today. The volume of long positions in the dollar increased, which ultimately led to a rise in the currency pair above 91. The fact of the next bullish move indicates the possibility of testing the recent local high. However, when trading this instrument, traders should not forget about low liquidity. Indeed, exactly this factor gives it the ability to quickly change its trajectory. You have watched Market Review on the InstaForex TV channel. We wish you profitable trading and see you soon.